All right, it is Friday. Welcome back to another episode of Stock Market Weekly, hosted by yours truly, Evan Medeiros. The date today is August 30th, last day of the month, wrapping up summertime trading, and things are likely to pick up here as everyone comes back from vacations into the start of September. And it is a long weekend, of course, Labor Day weekend. Enjoy the extra day off away from markets. Let's get into the headlines from this week. The big story, of course, was NVIDIA. All eyes were on it. It did not disappoint. The company basically blew out all of the numbers, all of those expectations, produced some fantastic results, extremely profitable, increased the buyback program, and yet the stock went down. And this is the beauty of markets. Remember, it is not the numbers that really matter here in the short term. If you're trying to play that next move, it is what is the expectations for the stock, and were those expectations exceeded enough, right? It was not good enough to just come out with good numbers. We needed that oomph. We needed the acceleration. We needed something more. And did not certainly get that on the stock. Reaction was down pretty slightly, but generally speaking here, still a monster performer over the past weeks, months, and years. Now, we are going to dive into the semiconductors just generally as a sector. So we're going to do that in this week's episode. We've got a very tight trading range developing here in the S&P 500. It's something to take notice of now. We're going to be setting up for some volatility expansion into that September trading month. Talked about the long weekend. We've got jobs report coming next Friday. So something else now to pay attention to. Of course, economic data. The jobs report is an important one. And oh, by the way, that little index called the Dow Jones just closed at all-time highs. Stick around. Let's get into it. All right, we are back. We've got some charts in front of us. TC2000, that is a charting platform we're using throughout this video. We've got a referral in the description of this video. We also support the platform here. So if you want custom downloads, indicators, stock scans, all kinds of goodies, we have it available on our website. And if you want to sit down with me for an hour, optimize your TC2000 workstation, figure out how to arrange layouts, build watch lists, all kinds of stuff like that, reach out to us, thetraderisk.com. Let us know how we can help with TC2000. Now, let's get into the numbers here. 1 week returns mixed. Split here with the Dow Jones and the S&P 500 in the green. Dow Jones up nicely here, 1%. Nasdaq was down almost 1%. Russell 2000 kind of sandwiched in the middle there, slightly lower. Volatility came out of the market a little bit, though, going into the long weekend. A little bit surprising there. But VIX here going out at 14.85. If we take a look here at sectors, most things were working this week. It was financials, industrials, and materials leading the charge higher, up anywhere from 3 to 1.5%. It was really technology, which was the drag, and consumer discretionary as well. And communication services, that kind of trio there that usually hangs together. Basically, the only things red this week were that high beta, or I shouldn't always say high beta, but technology really focused. And we talked about that last week, right? Like that was one of the themes. We highlighted the relative weakness that we were seeing there in the Nasdaq 100, and that certainly played out this week. Now, if we take a look here at our sector trends, this is our smart trend filter. It's an indicator built for TC2000. It's also built for TradingView. Really wasn't a whole lot of change this week. You can see that most things that were in an uptrend are basically just still in an uptrend. Most of those daily uptrends triggered a couple weeks ago. So these trends now are getting a little more established here on the daily chart. Financials, industrials, right? Real estate, materials, all those things. I mean, really, you had a little bit of, kind of sideways chop here and down action in energy. I mean, it's still kind of moving sideways here, but healthcare, utilities, I mean, everything is kind of working. And even technology, even though it was down this week and underperforming, it still hasn't produced a fresh sell signal here. It's still, giving the buyers the benefit of the doubt from those early August kind of pivot lows that all of these trends made. Now, I do want to show you this cool new little sneak peek here of a relative strength chart. So this is a new layout, new dashboard that we're going to have available available on our website. These are ratio charts, relative strength charts. And right now you're looking at, again, the spider sector ETFs plotted versus the S&P 500. So you're not looking at absolute returns here anymore. You're now looking at relative returns. And you can see that, the S&P 500 has really been crushing most things here. And when we look a little bit closer underneath the hood, take a look at this bottom left chart. This is financials. And you can see that financials now are, stabilizing. It's been a tough year and a half, I would say, or at least moving sideways, kind of market perform versus S&P. It's starting to, perk up a little bit here. And so that's interesting and notable. If we go to the top right, you can see, oh, I'm sorry. Let's see, I got financials twice. All right, well, financials twice in the bottom left and the bottom right. I got to update this layout. This is why it's a draft and it's not available yet, because we're still working out the kinks. So financials there, that's why it looked good twice around. Bottom right is utilities, and you can see utilities starting to perk up, starting to trend a little bit upwards here. Relative strength building versus the S&P 500. And then finally, like we mentioned, technology, right? Technology, XLK. We really talked about the Nasdaq 100 last week, but we talked about how the Nasdaq 100 was kind of losing steam, relative underperformer, kind of market perform. And you're seeing that really play out here as well. So take a look at the XLK and look throughout this entire year. The XLK is basically now, kind of going sideways here over the past year, kind of in a market perform. And now it looks almost like it's trying to roll over a little bit. So this is something to take notice of. Cool new view. We've got the 3-month rolling returns down below. So keep an eye out for this new layout to hit the TC2000 store on our website soon. We've got one more screen, which we'll show you in just a second. Before we get there, though, I do want to show you market internals. So take a look here at the 52-week highs, really just romping and stomping this week. This is beautiful. It's the thing you really want to see, and that strength underneath the hood. This is why we pay attention to it every single week. So again, even though I think on the surface, technology stocks and a lot of retail traders focus on tech for good reason. They produced fantastic returns, but there are other things starting to work right now. And this is another illustration here. Our first is our sector views, where we see things that are starting to work and outperform. Now we look under the hood and we see that there are plenty of stocks hitting 52-week highs in this environment. So they might not be the familiar names that worked for the first half of the year, but there's still a lot of strength out there. So that is encouraging to see, nice to see, with breadth continuing to hold up. Now, I want to show you one other screen. This is part of that new layout, relative strength ratio charts here. And this is looking at a handful of different factors. We're not going to spend a tremendous amount of time on this video right here, on this particular slide, but look at the top left here. So this is Russell 2000 plotted relative to the S&P 500. So basically looking at small cap exposure versus large cap exposure. And then you can see it has been obviously a tough ride. There's no, this shouldn't be a surprise to anybody, right? We've been talking about how Russell 2000 has basically been a dog for the past 2 years, but it's trying to come alive right now. And then take a look right here. Most recently, it is trying to turn green. It's trying to sort of put in a higher low, if you will, versus large cap, and seeing if it can start to springboard and get above trend. We're going to pay pretty close attention to it. Take a look at our growth stocks here. Growth stocks continue to work in this environment, getting a little bit weak. This is growth relative to value. And you can see, though, it is starting to kind of test trend here, which is basically saying that value stocks are starting to get a little more in focus here and starting to work a little bit more. So it hasn't completely rolled over, but something to pay attention to. And if we look at our last one here, this is high beta versus low beta stocks. And you're kind of seeing the same thing, right? This is already tipping now. We're starting to get that low beta portfolio, which is starting to show some outperformance. So cool new dashboard here, and will soon be available. We'll, basically work it into our stock market weekly updates when we have interesting things to look at. So let's take a pit stop here. Let's thank our sponsor, Investors Business Daily. They help make the show possible. This is their IBD 50 list. This is their top 10 list. You can see that it was a mixed week so far this week. This list updates every single week. If you want a good quality, kind of fishing list where you can pay attention to the stocks that are moving up the list, that are ranking up on this list, I recommend getting a subscription. You can get a link in the description of this video to stay up to date with everything IBD is publishing. So thank thank you, IBD. Let's move on here to our macro slide. You can see dollar index was up this week. It was up sharply, and same thing with yields. So we saw basically the inverse that we've seen over the last 2 weeks. We saw dollar rolling over. We saw dollar weakness. We saw yields falling lower. And now we're seeing kind of a snapback here into the end of the month. So we still basically have lower lows, lower highs. The structure hasn't changed here, but we got a little bit of a reflex bounce. Same thing with treasury yields. 10-year yields were up this week. So something to take notice of. We'll pay attention to it. It hasn't changed the structure. It hasn't put us on, super defense or alarming standpoints here, but it's something worth watching. If you take a look at commodities down here, not a whole lot to say. I mean, Bitcoin continues to struggle to find its footing. Take a look at that weekly performance. You can see that the IBIT ETF was down 8%. We talked about it was kind of just range bound last week. Our trend following system, our Galahad trading system, which trades Bitcoin, has been out of it for the last handful of weeks. Can't remember the exact date. We saw our exit signal, but we do not have a trending large position in that at the moment. And, we still just need to see that dust settle. Everything else here kind of chopping around. So let's get into some of the stocks. Let's start it off here with the S&P 500. I want to talk about this range that's developing here because it is now certainly something we want to take notice of as traders, because this range is getting pretty extended. It's compressed, and we know that volatility compression leads to volatility expansion. You could argue that this is a very healthy, constructive looking digestion pattern here. We had this absolute launch pad V-shaped recovery off of those August lows, and we have not given anything back in terms of a meaningful retracement in price. We have gone, dead silent, chopping sideways here, up, down, up, down, up, down in the same, 100-point range here in the S&P 500, basically 1.5%, and it's falling and it's landing right underneath the prior July all-time highs. So we have a nice explosive setup for us heading into next week. It's probably going to be the jobs report that tips this out. I wouldn't be surprised to see us chop around for the short week, for the Tuesday, Wednesday, Thursday session. Friday jobs number, probably the catalyst to really push us out here. That's the way I'm kind of looking at things. If I had to take a guess, with the breadth support we've seen, with the price action here, this looks like a pretty glass half full pattern. But of course, we've got a catalyst on deck. We've got economic data coming out, which is highly in focus by the market right now on what the Fed is going to do come September. Maybe 50 basis point cut, maybe a 25 basis point cut. Seems like they're cutting, right? Let's see if we can get them to the 50 basis point cut, right? That's probably what the market's going to be looking at, is how aggressive are these rate cuts going to be coming, and jobs data is certainly something that will impact that. So S&P 500, pay attention to this range. 50, call it 55, 60 on the low end, and on the upside here 56, 55, basically to these prior all-time highs. If we take a look here at the Nasdaq 100, here is that underperformance, that relative underperformance that we talked about. Now, look, it doesn't look terrible here. We still had, again, this very quick move off of the lows here. We went up 14% in a straight line. A little bit of a kind of a bull flag developing here. It's not a terrible thing. It's just that on a relative basis, the S&P 500 looks stronger. The S&P 500 is up towards its all-time highs. This is not. This is more in the top 60% of the range here. So something to take notice of. Again, I don't hate the look here whatsoever. It's just that it's a little bit lagging right now. But if this starts to trigger, and if this starts to move, and it starts to break this pattern here, then I'm totally fine with taking that setup and continuing to maintain exposure. I do have exposure in the Qs here, part of our Galahad trading system. It is it owns the S&P 500, but it also owns the Nasdaq 100 on a trending basis right now. So I do have a position in the Qs, and I hope that this consolidation turns into a continuation pattern, which gets it back up to these prior July highs. Okay, but certainly, again, in the short term, you're noticing that relative weakness. Last but not least is the Russell 2000. Continues to look pretty strong here. Again, this has a very different look than pretty much all these others, but if we zoom out here, it is above our 210 line, right? That's our line in the sand here. We liked Russell 2000, broadly speaking, above 210. We dislike it a little bit more, below 210. And right now it's above 210, and it's getting close to these prior cycle highs here made back in July. So it's not quite there yet. It's, again, grinding up, putting in a slightly different kind of walk up here, but it's grinding. And we know some of that rotation's happening under the hood. And so let's keep an eye on the Russell 2000. I still like this general segment of the market right now. So I think that's about it on the major indices. And quite honestly, I don't have a whole lot. I mean, it was kind of a boring week in my mind. If you took out NVIDIA, it would have really been a snooze fest. I do want to just talk, I guess, briefly about semiconductors and NVIDIA a little bit, more specifically. We'll see if we can pull up semis here. Let's see if we go to... Yeah, so if I look at the SMH, for instance, yeah, I'm kind of screwing up the order, but that's okay. So this is our strongest and weakest sector industry collection here, and I'm just going to sort of, well, I'm sort of destroying the layout here, but that's okay. So SMH, let's talk about SMH real quick. So of course, or, let's actually back it up. Let's just talk about NVIDIA real quick. So we talked about NVIDIA last week, right? We talked about the fact that the implied option move was basically 11%, and we should expect, a 10 or 11% move in either direction. My pie in the sky opinion on how this would all sort of play out was a gap up, and a gap up that would get faded. We just got the fade. We got no gap up. Now, again, I said I wasn't playing that earnings report. I wasn't participating in that trade, but that was my just kind of expectations going into NVIDIA. And we did get the fade. It just felt like expectations were high. I thought we could still get one more oomph out of it, maybe test these highs and then fade. But right now, I mean, when we look at NVIDIA here, it had a 6% post-earnings reaction move. The option market, again, was pricing in about 10%. So it was kind of all well within normal here. There wasn't really anything too extreme in my mind. It felt pretty ordinary, pretty boring, all things considered. Again, numbers were great. So NVIDIA, when I look at it here, I mean, it looks like it's just needs some time. It looks pretty good still. I mean, I don't really see any major warning flags. We didn't see a tremendous amount of volume. We didn't see anything that is suggesting that the long-term trend is in jeopardy here. I mean, sure, could we trade down to 110? Yeah, absolutely. We could come in and fill some of this gap and just slip up some traders down here and put in a higher low. But generally speaking here, it doesn't, at least at this time, look like we're coming back down to the August lows. It looks like we're going to either slug sideways or perhaps put in some type of higher low around this area. So that's kind of the read there for NVIDIA. If we look at semis, the SMH, I do like this setup a little bit better. And in fact, I did some buying on the SMH. So post earnings NVIDIA on Thursday, going into the close here, I started to buy some SMH. It is not a large position. It is a half position, maybe even a 40% position for me. I would love to try and average into this a little bit cheaper. We'll see if I can get it. But I started buying some on Thursday here now that the event was out of the way. I do like that relative outperformance here in the semiconductors. I think the weekly chart, again, not the best location here, but again, it's a starter position. I do think that, if we do flag out here, if this consolidation can lead to some type of higher low off of the August lows, then I think we're in business to potentially come back in here, gap fill, and maybe retest these highs towards the end of the year. Okay. So longer term play, nothing extreme, nothing short term, no leverage, right? Just very kind of, vanilla, looking to participate in the semiconductors here for the next 1 to 2 to 3 months. So SMH, have a position here. I like the orderly consolidation that's taking place. Let's take a look at some of the components. Now, NVIDIA is 20% of this. So again, if NVIDIA totally rolls over here, then that's certainly going to be a little bit of a problem for my SMH trade. But let's take a look here at some of the semis. outside of NVIDIA. I do think a lot of people focus on NVIDIA and then don't look at some of the other things in here. If we look on the week here, right? So this is just the VanEck SMH semiconductors. Look at Intel. Intel coming alive here. Now, it's not saying much considering it's down, 63% in, 4 months, but it certainly popped here on Friday, certainly helping the case for the SMH relative outperformance there. But it looks like it's pushing now back into this gap. Will be very interesting to see if the dip buyers really kind of push in here and start to fill some of this gap. So Intel, I think, is pretty interesting. Marvel is looking pretty strong here as well. So if we take a look at Marvel, take a look at this, looking to break out here into the end of the week, and it's got a long consolidation, year-long consolidation starting to move from. I'm not going to look at all of these. I'm just going to pick out a couple that look interesting on semiconductors, also, kind of threatening the top end of this range and looking real strong here as well. So those are some of my favorites there. NVIDIA was the worst performing this week. So if we look at performance on the week, it was down 7%, which, of course, we just covered, and then followed by Micron, which was also a pretty dismal performance this week, 6.5% to the downside. This looks pretty sloppy, all things considered as well. And then AMD trying to get its act together, but still kind of struggling here. So semis, I think, are interesting. They're still down. Let's see. They went through a 29% drawdown from peak to trough here throughout the start of August, and now they're basically 14% from their highs. So let's see how this trade follows up. Again, I would love to try and get into this a little bit lower in terms of price, average into this. That's my style. That's the way I'm managing this trade. If you're just looking for strength, then you're looking for a continuation pattern to develop here over 250, over 252, get above the recent highs here, and then you get a trade to, again, fill the gap and push up towards those highs. So that's what I have today. Pretty short week, not too much to talk about. Excited for September to come around the corner. Hopefully you did okay out there trading. You didn't fall asleep and you're still having some fun. So that's it for me. We got links in the description of this video. Don't forget, IBD, sponsor of the show. You can check out our referral link to Warden TC2000. If you want to know more about how we're trading, how I'm trading, check out our trading systems links in the description of this video. Thanks so much. Take care. Have a great long weekend. We'll see you back here next Friday.